Hey everyone, back again here on Tuesday for another edition of That's Our Two Satoshis Live, where we talk about everything in the crypto markets. I'm Jeff Dorman, CIO of ARCA, joined this week by Michael Ashby, who is the CEO of ALGOQUANT. So, Michael, thanks for joining.
Thank you for having me.
Before we get started, quick disclaimer: none of this is investment advice. But as always, we're going to talk about the crypto markets. I think most of you who watch this on a weekly basis know that I write a blog every Monday. Comes out on our website, ar.ca/blog, talking about crypto markets. And we try to talk to a guest who maybe has a different perspective on markets and on structure. And Michael, I think you've seen a lot of the things I've done in the past. Recently, been hard to kind of talk about crypto specific factors, just because, quite frankly, there really hasn't been a whole lot outside of maybe Polymarket. But there's certainly been a lot of structural changes to the market. Certainly, a lot of interesting developments happening, both from an investor asset mix as well as just other participants. What are you seeing? Like, what do you think is most important, sort of driving what you guys are doing at AlgoQuant right now?
Yeah, sure. So it's great to talk to you, and thanks for the opportunity. So I think there's a few things going on. There's obviously the political sphere, which seems to be changing, and how that evolves. There's the international versus U.S. dynamic in terms of what's happening and who's doing what, where, when. And again, all of these are interlinked. I think lastly, there's sort of the evolution of 2.0 versus what I call the bad boy years. So a lot of people point to FTX, but there's other players that were at best very lax. And off the back of that, I think we do see an evolution of how the incumbents are interacting with each other in the ecosystem. And so I think all that combined has changed trading, investing, and I think it will set us up for new entrants into the market.
Can you go a little deeper on that? Like, obviously, I think most of our viewers probably know, besides FTX and Alameda, you certainly had some parasitic funds and market makers out there. If it really is transitioning to more of an institutional player base, though, why are you seeing liquidity so much worse, right? I mean, we'll throw out a couple names here. Obviously, it's no secret that Jump has been sort of in and out of the market, but obviously Jane Street's been a big player. Citadel's entering. Is that who you're talking about? Or are you talking about some other, market makers and players that are really kind of taking over this industry?
Yeah, I'd say it more as this is our, I guess, interim stage. So, like, we're all builders in crypto, but building takes twice as long as your vision does, right? And I think we're in the latter stages of the rebuild. And so I guess what I'm thinking about, I'm thinking more about the infrastructure layer, the vendors that provide the ecosystem. And so if we put the market makers aside for a second, we look at the prime brokers, the custodians, and the exchanges. They've all made steps to adapt to what I think is a new normal of a more sort of institutional approach. And so if you look at the PBs, what they were traditionally doing was just playing an aggregator game. And so they weren't acting like you'd see a traditional prime broker in TradFi do, like Morgan Stanley or Goldman Sachs. They were acting more of as an FX PB.
Well, I mean, really, there was no, and really still isn't, a prime broker. I mean, there was a couple of companies out there who tried to throw prime broker up on their website and pretend that they were doing prime broker functions, but nobody has done it, right? Nobody has successfully pulled it off in crypto.
Yeah. There's a few that are trying, but the key element to me, and I spent 10 years of my life being a buy-side trader in TradFi, so working with the PBs is that there's a balance sheet and there's a fiduciary responsibility to provide service levels, especially around lending. So it's borrowing to short stocks, basically, right? And so what we haven't had yet in the ecosystem is a funded balance sheet and a prime broker that plays that role. Now, I think a few of them are trying to get there, and they're fairly close. And so if you look at what led up to FTX, or was partially responsible for it, if you will, was the lending collapse, right? And we haven't really built back that infrastructure. There's a few firms like Membrane Labs is building infrastructure to do some stuff, and a few others. but we still don't have a fully functioning lending market.
Yeah, but part of that will never happen in crypto simply because it's a T+0 asset, right? The fact that you basically have to, I mean, you look at the big custodians in the market today. A lot of them, even if it's the same firm custodying your assets and allowing you to trade, it's still basically a walled off separate business. So it takes time to move it from, like, you can't trade it first and then go get it out of custody second. They physically have to move the asset before you can trade it. You also have, the issue with those who are doing the majority of the trading still don't have the reputation to actually house and hold your assets, right? That was the big problem with Genesis and some of the others that got in trouble was, they really weren't very trustworthy institutions that you were being forced to hold big positions at. The same can still be true on some of the big exchanges, right? Even after FTX, I mean, I think Binance is still doing the majority of the futures business, but you have to hold so much collateral there in order to really do it efficiently. So to your point, it's not just about having a big balance sheet. It's about having a big balance sheet with a trusted institution. When we were on the, debt and equity side, for example, it was just a box to check essentially who you used as your prime broker, because there were so many that had 50 to 100 years of history doing it the right way. So you can solve the balance sheet if somebody very big comes in. I don't know how you solve that reputational and T+0 problem.
Yeah. So I think you're spot on. I think, and this is a fun bit, right? That we've brought this incredible technology, and now we need to marry it with traditional finance sort of mindset and thinking. So I think there is an element of the evolution of what is tri-party. There's evolution of off balance sheet credit, etc., which in these institutions where you don't necessarily have to move things physically, but you'll be able to get synthetic collateral leverage, etc. I think that's evolving. To the point on institutional's reputation, I do foresee a number of the larger players entering the space and the commoditization of a number of these different functions, which I think has led a number of the larger players to try to be everything. And I don't necessarily think that's a good thing. I think everybody's trying to figure out where there's revenue and how to grow. But I do think there should be segregation of duties between different firms. And that will cause some friction, to your point on the T0. But we do need to move to a place where investors, LPs, and be able to attract new capital into the space. There needs to be this feeling that their capital is protected. And so I think a lot of the firms I'm talking to, they understand that. They're trying to get to it. It's just not a quick problem to solve.
Sure. So what are, I mean, I don't know if, I think most of the viewers know some of the ARCA strategies, what we focus on our markets. I wrote about this week talking about, it's really just a matter of time before crypto catches up, given that, after the August 5th shakeout, you have pretty much every other risk asset except for crypto rallying back to near all-time highs. The yen carry trade's basically over. The Nikkei is basically roared back. The VIX has had the biggest weekly drop in history. You have obviously U.S. equities and gold rebounding. What are some of the factors that you look at in your fund, and sort of what you guys are looking at that are mostly affecting markets, or that you guys think are going to be the most influential factors over the next 12 months?
Yeah. So I guess we are a quantitative manager. So really we're looking at different algo strategies. And within crypto, there's a lot of arbitrage opportunities. So it's really looking at between tokens, exchanges, geographies, what have you. We also look at statistical arbitrage, and so that can be more directional. So from our perspective, it's the other end of the spectrum, if you will, from what you guys do at ARCA. And so it's why it's fun to talk to you, because we're looking at the same sphere, but from different vantage points. So volatility is very positive for some of these strategies, and for others less so. And so we're able to toggle between them, and really engage with the right playbook, if you will, based on our ability to backtest and look at pattern recognition. So our firm's split into two. We have a prop entity, which has been around for about 5.5 years. We allocate to external managers as well. So we have a number of talented teams that we allocate money to. And through those signals, we're able to sort of see what's working, what's not. On the fund side, we're actually in the process of launching that. It'll be a very similar business. We're also, one of the things that we've identified is that there's a lack of treasury products for some of the larger players in the space. So we're in the process of launching a Bitcoin bond, which will be an SPV vehicle. We'll announce more in the coming weeks. But really, I think to your point, for us, trend following is one, volatility is fun. We're able to just basically plug in to whatever the market's doing it.
So how do you adjust those models? Recently trend following has been tough because we keep hitting the upper bound of the range and getting rejected. We keep hitting the lower end and seeing resistance. Volatility has been coming in. Basis across futures spot has been coming in. Some of the typical playbooks that have worked really well over the last 4 or 5 years are not working in this current period. So are there adjustments that you guys are making? Are there certain other factors that you're starting to look at that maybe weren't relevant 3 years ago that are more relevant today?
So I guess it's if I use a baseball analogy, we have a deep bench, and it's basically working with the PM teams to ensure that they are at the forefront of understanding that there is a change in market dynamics and what models are working. So because we have a lot of different PM teams, we're able to sort of work with them to figure out what's working, what's not. And I think the diversity of the different strategies has enabled us to continue to work well with these markets. And so, there's horses for courses type thing. So that I think right now, as you say, a regime change, right? That ball is always, it's hard for anybody to trade it, but it's being patient, it's being very focused on risk management and making sure like our model is not to hit the ball in the park. Like we're not looking for that. We're looking to find repeatable returns that every day we just putting up some numbers, and on a day where everything goes haywire, the drawdown is very, very small. And so it's a different type of business model, if you will. But for us, a couple of weeks of everything going haywire, we're able to sort of navigate it just by really stringent risk management.
Do you find anything abnormal about the recent kind of lack of correlation? I'll preface that by saying that I've never really believed that crypto had any meaningful correlations with equities and rates, right? It comes and goes, which is sort of the definition of uncorrelated. Sometimes it's positively correlated, sometimes it's negatively correlated, but there's nothing that has been consistent over time. But even I'm shocked with the lack of follow through right now. I would have expected that you would have seen some more quant firms, some more macro funds, some more maybe non-crypto native firms start to kind of dive back into crypto, even if the theory is simply everything else is rallying and this will be the fastest horse if you get a real kind of rate cut liquidity rally in the back half of the year here. Are any of the quantitative funds that you speak to, or any of the strategies that are not crypto native starting to look over in this pond again?
Yeah, look, I think this goes back to what we talked about earlier. It's very hard to, the US has been incredibly successful building, I think, the biggest hedge fund base in the world, the most successful hedge fund business. As a US hedge fund, it's very difficult to access crypto markets. It remains difficult. And so a lot of this has been offshored, but the capital is here in the States, and the talent for a lot of the hedge fund strategies remains in the States. So I think it'd be great to understand what the regulatory roadmap is going to be so everybody can adhere to it. I still don't think we have that. I don't think we'll get comfort on that until post-elections. And so I think a lot of the larger firms that are US ultimate beneficial owners are just struggling to do that. And you've seen a lot of them offshore. I moved to Dubai, so I'm now based in Dubai. I'm not there this summer, but I made that my home. And the number of quant funds, prop funds that are now in Dubai has skyrocketed. But you just still see an absence of what are the traditional large players in TradFi quant, not in the space. And so I think once we have clarity on the roadmap and what the SEC and the powers want, then people will be able to build to that. And I think you'll see probably a 1 to 2 year build cycle for those firms. Some of them have already tried to do it. so it's shorter for some, but that will be game changing. And to your point, you named some prop firms that are sort of been in and out. I don't think everybody's recommitted yet, which in many ways is great for the crypto natives because if you're still here, the opportunities abound and there's less competition, but the liquidity is less. And so I think the grass is always greener, right? In the future, we're going to have lots more players, but there's be more competition for those opportunities. So some of the spreads are going to condense.
Yeah, I think that's right. And I think you also hit on the head with the election. We're seeing it here when we talk to both institutional investors as well as just other non-crypto native firms. And, those who are already in the market are in it, but those who are not and we're looking to enter, nobody's doing anything until after the election, or at least, leading right up to the election. So probably a couple more months of chop here, before you get any real definitive inflows. But I do expect some of the marginal dollars to kind of flow back into crypto over the next couple of months, just given the way it's lagged other markets here. So, Michael, we're kind of bumping up on time here. I want to get you out of here. Anything else you want to address, either in terms of structure or markets, or anything else that you guys are seeing that you find really interesting?
Yeah, I guess maybe I'll just leave you with the idea that I think the exchanges are also get it, and they're hungry. So I think the exchanges are going to adapt their business model, which I think will help all the different players and bring liquidity. So I think tokenomics is going to change. I think the exchange will change, and that will be a lift for the whole ecosystem. So I'm excited to see a little bit less short-termism, more medium to long-term thinking and how we build.
And you think that comes from the exchanges acting in an investment banking type capacity, where they are effectively structuring and dictating what gets listed, or how do you feel that ultimately gets taken?
So I think we've seen a couple of the first steps of this. And so one very large international exchange has stopped allowing firms to aggregate their flow. And so they want direct relationships with all the providers. And that will allow them to actually build business around it. So to your point, whether it's investment banking, lending, I think you have some of the stablecoin issuers starting to get more involved and help to facilitate stuff. So I think we're going to very quickly see a marketplace where it has to become more, compliant, as well as easier for new entrants to do business. So I think everybody gets that. And so we're in that sort of, as I mentioned earlier, that middle period. But I think we're coming out at the end of that. And so I'm excited. And I think we can check back in 6 months. I think we'll see a different world then.
Well, maybe we'll have you back in 6 months exactly to see if that prediction comes true. I'm excited to see it. So, Michael, thank you for joining and talking about markets here. For those listening, thank you as always. We'll be back again next week, and of course, you can read my thoughts on the markets on our website ar.ca/blog, and you can catch us on Twitter. Michael, where can people get more information about you or your thoughts?
LinkedIn and around conferences. I'll look forward to seeing you guys. Thank you very much.
Perfect.